I now hand the conference over to Mr. Anubhav Adlakha from Antique Stock Broking Limited. Thank you, and over to you, sir.
Good afternoon, everyone. Hope everybody is safe and healthy. Thank you for joining us on the IOL Chemicals Pharmaceutical Q1FY22 earnings call. Today we have with us Dr. Sanjay Chaturvedi, Chief Executive Officer, and Mr. Pradeep Khanna, CFO, with us from the senior management. We'll begin the call with opening remarks from the management, followed by an interactive question and answer session. I'll now hand over the call to Dr. Chaturvedi for his opening comments. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. Thank you all for taking the time to participate in this earnings call. I trust you have read the earnings document, and I'm certain that you will have questions. But before we take up these questions, I would like to shed some light on the business and share my perspective on the performance for the quarter that has gone by. And then subsequently, my colleague, Mr. Khanna, the CFO, will then provide a lot more granular details on the financials. IOL Chemicals and Pharmaceuticals is one of the leading API bulk drug manufacturers, and we are a significant player in the field of specialty chemicals. We are the largest producer of ibuprofen with an installed capacity of 12,000 metric tons per annum, and we have complete backward integration of all the major chemicals that are required to produce ibuprofen. We currently hold about 35% of the world market share in this product, ibuprofen. We are also amongst the top producers of ethyl acetate, and we have a manufacturing capacity of just over 100,000 metric tons per annum. Ethyl acetate is a specialty product that has wide applications in industries like pharmaceuticals, ink, packaging, adhesives, surface coatings, etc. Our company is also the second largest producer of isobutyl benzene, which is the key intermediate for ibuprofen, and we hold about 30% market share for this product. IOL Chemicals and Pharma has successfully completed in this quarter the installation of our new manufacturing facilities, which is Unit 10, where we manufacture multiple pharma products including fenofibrate, lamotrigine, and UDCA to cater to the growing demand for these products. The installation of the new manufacturing facility, Unit 9, to manufacture gabapentin and other pharma products is slightly delayed because of the COVID second wave that happened, and we are expecting to complete this in the third quarter of this year without any cost overruns. And all the capex that we are doing is currently being met through internal accruals. We are delighted to announce that our credit rating has been upgraded one notch for the banking facilities availed by the company. Our long-term, which is the fund-based working capital rating, has been revised from CARE A to CARE A+, and the short-term, which is non-fund-based working capital rating, has gone from CARE A1 to CARE A1+. We have a R&D facility that is approved by Department of Scientific and Industrial Research, DSIR, and we are equipped with all the advanced analytical instruments for conducting research. Coming into financials, the company on a basis recorded 12% growth in total income. However, the EBITDA has declined by about 27% on a year-on-year basis on account of the stress demand, primarily due to the second COVID wave globally. So with this, I would like to hand over to my colleague, Mr. Pradeep Khanna, the CFO, who will be talking more in detail. Over to you, sir.
Thank you, Dr. Chaturvedi. Good afternoon, everyone, and warm welcome to IOLCP Quarter 1 Financial Year 22 earnings call. I will take you through mentioned highlights for the Quarter 1 of Financial Year 22. The total revenue for the quarter increased by 12% to rupees 524 crore as compared to rupees 466 crore in the Quarter 1 of Financial Year 21. In Quarter 1st of Financial Year 22, EBITDA was rupees 116 crore as against rupees 158 crore reported in Quarter 1st of Financial Year 21. EBITDA margin in Quarter 1st of Financial Year 22 has dropped to 22% from 34% in Quarter 1 of 21. Depreciation for the quarter was rupees 10 crore. Finance cost stood at 1.7 crore in Quarter 1st of Financial Year 22. In this quarter, the company reported exceptional item amounting rupees 13.93 crore, representing a one-time cost toward write-off recompenses payable to their lenders against sacrifice made by them in financial year 14-15 on account of restructuring done under JLS route. Profit after tax for quarter first of financial year 22 stood at rupees 67 crore as against rupees 128 crore during quarter first of financial year 21. PAT margin for quarter one was 13% as compared to 27% in quarter first of financial year 21. With this, I would now request the moderator to open the forum for question and answer session. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Manish Poddar from Nippon India AIF. Please go ahead.
Yeah. Hi, sir. So I have three questions. First one is, probably if you could guide me, what is our outlook for the offtake for ibuprofen for full year FY22?
Okay.
And were there any shipment delays which happened in Q1 which we expect to happen in Q2?
Okay. So let me answer that question by saying that overall, the demand softened about 15% in this quarter versus the previous year. We do think this is anomaly and a blip. This is not a structural shift in demand. Our outlook for ibuprofen for the rest of the year is that Q2 we expect to be muted just like Q1, but the demand will pick up from our export customers in Q3 and Q4. Second part of your question was, were there any delayed shipments in Q1 that spilled over into Q2? So I don't call them delayed shipments. Essentially, some orders got deferred. See, what is happening on the shipment side is the prices for shipping have gone up dramatically. Today, if I compare from 6 months ago, the shipment costs are 200-300% more. And therefore, what customers are doing is they are trying to make good with whatever inventory they have and essentially push any offtake, hoping that, by the end of this quarter, when the Christmas season deliveries are over in the western part of the hemisphere, by then we do expect to see some normalization in shipping rates. So, to answer the short answer to your question is, no, we didn't lose any orders or we didn't have any shipment delays, but these were more deferments. And, that will be rolled from one quarter to the other.
Okay, so the large part of, let's say, EBIT contraction which you've seen in the pharma segment, it's largely led by ibuprofen, and the other pharma products, there the losses are marginal. Is that a fair understanding?
Well, yes, that is a fair understanding. In fact, if you look at our non-ibuprofen API business, that has grown. So, it depends on, which number you want to look at. But in this year, if I look at non-ibuprofen API business, this quarter we delivered about 63 crores of business versus 45 crores in the first quarter of the preceding year.
And are we incurring loss up there or right now, or let's say our utilization north of 45-50% now, and we started making money up there?
Yes, we have just about broken even on this, and I think we will be, pushing into, exports. The challenge here for us right now is the approvals, so the regulatory approvals. See, even now the live audits for India have not really started full on. So I think this quarter we will be having regulatory approvals, and audits from the Russian authorities, for example. The customer audits are ongoing, but the audits from the regulatory bodies are getting pushed out. Until those approvals come in place, it will be really hard to push the exports.
Okay, just two smaller follow-ups. One is on this exceptional item. Are we largely done with this item, or is there any amount still in litigation?
No, we are done. This was a one-time payment, and we settled. Yeah, we have completed this transaction. There will be no subsequent payments on this regard.
Okay, and so one last one. So now, given that you've been in the company now for more than a quarter or so, probably can you just highlight, let's say, 2 or 3 key focus areas? I believe there was a big capex plan which the company had to announce. So just want to understand, let's say, from a 3-year perspective, what is the roadmap? Just if the broader 2-3 key areas, if you could highlight, that will be helpful. Thank you.
Okay. So, as I've said in the past as well, we are in the midst of a transformation. We are in the midst of a true business transformation where, rather than look at what we are doing on a month-by-month and a quarter-by-quarter basis, one needs to, kind of take a step back and see over a 2-3 year time period. So if you look at, what are the things that we have said we will do and what are the things that we are trying to do. Number one, we are going to de-risk the company from ibuprofen. Not to say that ibuprofen is, I think it will continue to be our flagship product. We will continue to maintain global leadership position in that product. But we do see that because we have a large leadership position in that particular molecule, the growth options are somewhat limited. So going forward, what we will be doing is adding more and more products to our portfolio and growing the business of those products, starting in India, and then as we get the regulatory approvals, expanding into the export markets. Now, the only way you can add more products to your portfolio is through technology. So we are really taking a very strong, focused look at technology, and that will be the cornerstone for the growth. And you're right, we have capital that needs to be deployed, but I am going to have a much higher level of asset utilization for my current plants before I announce any new capex plans.
Okay, thank you.
You're welcome.
Thank you. The next question is from the line of Alankar Garude from Macquarie. Please go ahead.
Hi, good afternoon, everyone, and thank you for the opportunity. Sir, my first question is, can you comment on recent ibuprofen pricing trends and what would be your expectation for the next 12 months, especially in the context of muted demand in the first half?
Okay. I would say 2 things, that one, the prices have really bottomed out. We don't expect them to drop any further beyond where they are. That's the first message. The second message is going forward, we do expect to see some recovery, and that will mimic the demand recovery as well. So this quarter, we should expect the same flattened prices that we saw in Q1. But in Q3 and Q4, we should expect some upward movement in the ibuprofen prices.
And what would be our realizations as of Q1? The number which you said has bottomed out, what would be that number?
So we don't give out pricing information on a product-by-product level.
Fair enough, sir. So my other question is on more of a question on the de-risking strategy. So on one hand, you said that you want to de-risk the company from ibuprofen, but on the other hand, we also have plans to expand our presence in the regulated markets for ibuprofen. So how should we look at these 2 points, sir?
Okay. So if you look at my current capacity of ibuprofen versus my actual production, there is enough of a differential that I can use that to cater to the enhanced demand that I would get from the export markets. So I don't expect to have any more capex going into ibuprofen for now. But so essentially what we are talking is a 2-pronged approach. One is milking of existing assets, and the other is creation of new assets both on a product basis and manufacturing basis to be able to create more business from products other than ibuprofen.
Understood, sir. And one final question from my side. So one of our key competitors in ibuprofen has announced backward integration. Now, apart from them being perhaps more cost competitive because of this, I'm assuming that they would also be one of our customers for IBP and other raw materials. So do you foresee any impact of this on our business?
We have a leadership position both in capacity and in backward integration. I'm sure you will appreciate that decades of experience in ibuprofen puts us head and shoulders above the competition. So yes, I would actually say it is for the competition to catch up. And, we are pretty much prepared. We don't think it will have any negative impact on our business or financial performance.
Understood, sir. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Vikram Singh, an individual investor. Please go ahead.
Hello, good afternoon.
Good afternoon.
I have one question that our dependence on chemical has increased over time. So what's our way forward in that? Thank you.
Okay. So, our dependence on chemicals business has increased not because strategically we did that. It has more to do with the pricing and the pricing of the chemical product ethyl acetate and to do with the subdued demand of the pharma. So as we grow our non-ibuprofen pharma business to higher levels, you will see that this kind of volatility and the dependence on chemicals will actually go down. I have a stated intent that in a few years, chemicals should be no more than 40% of my total portfolio, and that is the area in which we are striving towards. And the intent of getting there is not through reduction of the chemicals business, but really through increasing the pharma business.
Right. And also I would like to ask one more question regarding the utilization of all the facilities that we have.
Okay. We have multiple plants, so I would say, that overall the plant utilization ranges anything from, 55-60% all the way to 75%. That's the range of asset utilization.
Okay.
And the chemical plant is running at about 100%.
Okay. Yes. Thank you.
Thank you. The next question is from the line of Ashish Thavkar from Motilal Oswal Asset Management. Please go ahead.
Yeah, thanks for the opportunity. So, most of the formulation companies, this quarter were saying there's some kind of pricing pressure, even the regulated market. So does that percolate to our API/intermediate business, and how do we see this scenario panning out over the next, say, 2 to 4 quarters?
So as I said earlier, Ashish, you're spot on. There is a lot of pricing pressure onto the formulation companies in the regulated markets. Some of that is being pushed back to us. We see minor impact of that on our ibuprofen business. So see, our ibuprofen business is a mix of India and exports. Within exports, we have exports to less regulated markets and the regulated market. And some of that has translated into not just subdued demand and subdued prices, but we do believe that pricing has bottomed out. And therefore, going forward, the Q2 will be similar to Q1, but Q3 and Q4 will be at a positive improvement, both in terms of demand as well as pricing.
Okay. So in a way, you are also referring to the fact that even formulation pricing pressure might stabilize in the next 2 to 3 quarters, right?
Yes.
Okay. And sir, in terms of our capital deployment going ahead, since you said our chemicals is broadly operating at 100% utilization, so if you could give just the percentage split where how should we look at our capital allocation going forward?
So we are in the midst of doing that exercise, and I think in the coming few months we will be ready. But broadly, a lot more capex is going to be deployed on the pharma side than the chemical side.
Okay. And just one last question. I'm very sure you might have got this question a lot many times from the investors. But on this China Plus One strategy, do you feel it's still a valid strategy to play, and or it was just a temporary phenomena which played to the advantage of most of the Indian companies?
So That's a very tough one to answer, Ashish, because the success of this strategy really depends on what our customers want to do. We are not really in the driver's seat for this. So what we are doing very aggressively is offering a China alternative. So a lot of the products that we offer are an alternative to buying from China, and we are trying to de-risk our business by buying as few, essentially lowering our dependence on China for raw materials and key starting materials. Having said this, the China plus one strategy to be successful in the real world, and not just for IOL but for players at large, is really dependent on a combination of what the companies do, what the customers do, and the government policies. So I think the government is doing their best by having, by incentivizing through a production-linked scheme, and I think several players have done their filings, as have we. So I really think, strategically that is the right direction. How much of it is going to hold really depends on how China responds and how the customers behave.
Okay. And from a therapeutic exposure point of view, any new therapies you guys are targeting or any new chemistries you guys are working on now?
So again, that's a work in progress on our strategy side and the portfolio and product selection side. And in the coming few months, we'll be ready to roll out a strategy for the next couple of years.
Sure. Yeah, this helps. Thank you so much. All the best.
Sure.
Thank you. The next question is from the line of Monish Shah from Antique Stock Broking. Please go ahead.
Yeah, hi sir. Good afternoon. So just a question on backward integration for our non-ibuprofen products like FLU and metformin and valsartan. Is there any update over there in terms of where we stand in terms of capacity or any process integration?
So I would say, I will leave it and say we've made good progress on the technical evaluation side. So the technical evaluation is complete. The work is in progress to really figure out what kind of a backward integration advantage we really have. We are doing mapping of what kind of capex would be required for this complete backward integration, because you will appreciate that, if we put aside capex for API without putting aside capex for the intermediates, the chain is as strong as the weakest link. So, in the next coming few months, we'll be ready to roll out the entire strategy of the therapeutic categories, the new products that we are targeting, what is our backward integration strategy in each of these, and what is the capex allocation that we will be doing in each of these buckets.
Okay, that helps. And so secondly, on US DMF filings, so we intend to file more of these non-IB products for the US DMFs, because I believe you were targeting more of exports revenue from developed markets. So the question is, sir, in terms of customer registration, how is it moving? If you can elaborate.
I would say directionally, Monish, the movement is in the right direction. The speed of those approvals and the speed at which we are moving has been impacted because of COVID. There are certain customers who are doing online audits, and not all customers have started doing online audits yet. And the regulatory agencies, like the Russian agency, for example, will be having their audit this quarter. They've adopted kind of a hybrid and online model. So I think till the COVID crisis is over, the whole approval process for exports will continue to be subdued, not only for IOL, but other players as well.
So you think there is a delay of, let's say, around 6 to 8 months, and maybe in FY23 second half onwards, we will see a better traction from our non-IB sales?
Certainly. I think we are already seeing that traction. So if you compare it, this quarter versus the previous quarter, we've gone from about 45 crores to about 63 crores. So, on a percentage basis, this is a significant jump. And we will continue to demonstrate that, and you'll be able to measure that, maybe if not on a quarter-by-quarter basis, certainly on an annual basis.
Okay, understood. So just
the line for the participant dropped. We move on to the next participant.
Okay.
The next question is from the line of Aejas Lakhani from Unifi Capital. Please go ahead.
Yeah, thanks for the opportunity. I missed your opening remarks as I joined in 10 minutes late. I just wanted more color on Could you tell us, given that ibuprofen is still the cash cow, and you have stated your intent to reduce the dependency on ibuprofen, could you state some percentage in terms of how dependent are you today and how you expect that percentage to move over the next 2 or 3 years? That's question one.
Okay. So if I look at my pharma business today, about 85% of my business in pharma is really ibuprofen. And if I look at going forward, I would say this number will drop to below 60% in the next 2 years or so.
Okay, that's very helpful. 2 years. Okay. And I just want to ask you that for the next 2 years, considering that Ibu will still be the cash cow, could you throw some color on how you expect 23 to pan out? Because you've already given a quarterly outlook for 22. So 23, some color on how you see ibuprofen demand, supply, and prices.
So we see, normalcy returning in demand, and certainly what pricing levels operate in in Q4 of this year, we would expect that to continue because ibuprofen is essentially a commodity API, and no large players are coming into ibuprofen. The market is pretty mature. It is well established with 3 or 4 leading players. And the smaller players, because of the low pricing that is observed now and continuing, are facing tremendous pressure. And I think the small players will essentially move into other products to be able to survive. So I see a lot of stability returning into FY23.
So that's very helpful. And could you mention how many smaller players are there in Ibu?
It's hard to know, but maybe between 1 to 2 small players are there in ibuprofen.
Okay. And sir, I read in the press release that there is an expansion that you're taking place in gabapentin. So again, gabapentin being a commoditized, well-established, mature product, it has a newer age molecule which has competition coming in, which is called out by another listed entity as well. So just wanted your thoughts on how you see gabapentin as a market and, whether there could be cannibalization given that, pregabalin is the newer age molecule to that. Thanks.
Yeah. So that, first of all, let me compliment you, Aejas, on your market knowledge. It's a delight to have investors who are so well informed about not only our products, but the competition that our products are going to have. I'm really pleased to hear that. So pregabalin, it's a very established, very large volume molecule. And, what do we bring to the table that is unique? What do we bring to the table is that we have a unique process with no dependence on China. So in our process. And really, I think that is what will differentiate us and allow us to gain a foothold. Having said that, our R&D team is also very aggressively working on pregabalin. So I think in future we hope to offer both products.
Noted, sir. That's very helpful. And when you spoke about the backward integration you were planning for across categories, you are considering these newer processes to be a part of that, right? For GABA and Prega.
Yes.
Got it. Thanks. I'll fall back in queue.
Thank you. The next question is from the line of Somansh Raju from Admin Capital. Please go ahead.
Hello, this is Thomas Raju from HME Capital. I had 2 questions. One is I can appreciate for us to see the results of your strategic roadmap will take a couple of years. But just from a historical perspective, what is the main reason why Ibu prices corrected so much in the last 12 months, and what gives you the confidence that the worst is over? That is question 1. 2, in Ibu, you all have a good market share, 35%, but we have seen that with the exception of DVs, no company in India has done a good job of taking market leadership in multiple generic API products. So you briefly mentioned that you will be investing more in technology, etc. But if you could provide more color on how confident you are that, the success of ibuprofen, that you can replicate that in a couple of more products over the next 2-3 years, and from where that confidence comes that, you can get maybe at least 10-20% market share in a few more products? And lastly, is the strategy on only generic APIs, or you will try to move up the value and look at more state-of-the-art APIs also?
Awesome. So I think let me begin by answering, you really asked three questions in there. Your first question is really why we have the confidence that demand and pricing will come back to more normal levels in ibuprofen. Okay. Now, ibuprofen being a commodity API is driven, the entire price level is driven by demand and supply. The supply is pretty finite, and that is capped based on the existing players. The demand that we see as low today is actually artificial for two reasons. One was there were a lot of overstocking in the earlier part of COVID, and that impacted not just us, but all ibuprofen suppliers. So you see, all ibuprofen suppliers actually had a bull run in that time frame. Now, what has happened is that there was a research report that came out from French medical group that talked about the low efficacy of ibuprofen to manage COVID. But subsequently, that report turned out to be untrue in terms of validations. So now, I think the stocks are depleting for our customers, and our customers are telling us that the demand is back. And our experience of this market is that whenever the demand is back, the prices also inch upwards. So that's one. Second question that you asked me was, what is our confidence level? And with the exception of Divi's, you gave an example, and Divi's is absolutely, I think, one of the finest examples of API players that has managed to maintain global leadership position in multiple molecules. What gives us the confidence that we will do that? Given that we have a cost leadership position, primarily through our operational excellence and backward integration in a commodity molecule like API, like ibuprofen, based on that experience, we have a high level of confidence that in select APIs that we pick that will be high volume APIs, by backward integration, we will replicate that story. But your point is very well taken. Will we go and occupy 35% market share in those APIs? Perhaps not. But certainly we are looking at double-digit market shares in those APIs as well. The third question that you asked was, will we be looking at all generic APIs, or are we going to look at some specialized products as well? I think given our DNA, given our manufacturing capabilities, and the kind of operations we have, and the confidence we have in those operations, we will continue to primarily be driven by generic APIs. Okay. We will not be looking at innovator APIs or that kind of business. I will certainly not be looking at a molecule like a fondaparinux or an eribulin that requires 70 plus synthetic steps. That's not who we are. We will be focused on molecules with fewer number of steps that leverage the kind of chemistries where we have expertise. We will be focusing on our manufacturing and operational excellence to get market share rather than pure R&D.
Thank you. So by extension, you don't see yourself even in the distant future in custom synthesis business?
It's hard to say that because even the custom synthesis is being driven into two parts. I call it the CDMO business, where you have the contract development and then contract manufacturing. Within contract manufacturing, there are a lot of innovator players that are offering contract manufacturing services of generic APIs, not necessarily innovator APIs. And Divi's is again a wonderful example that does a combination of that. We are evaluating opportunities in the contract manufacturing space, but not necessarily in the contract development space.
That's helpful. Thank you and all the best.
Thank you.
Thank you very much. The next question is from the line of Subrata Sarkar from Mount Intra. Please go ahead. Subrata Sarkar, may I request you to go ahead with the question, please? Subrata Sarkar, may I request you to unmute your line from your side and go ahead with the question? Due to no response, we move on to the next participant. The next question is from the line of Tanmay Krishna from BHI Advisors. Please go ahead.
Thank you, sir. My first question is, what's the cap utilization on metformin right now, and what are the growth prospects for the same? And is this a key strategic product to de-risk in the future?
Yeah. So my current asset utilization in metformin is about 50%. So there is enough headroom for me to grow this business. And what was the second part of your question? I'm sorry, I missed that.
What are the growth prospects for metformin, and is it a key product for de-risking your pharma sector of the firm?
Absolutely. See, it's a key product and will continue to be a strategic product in my portfolio. Having a product like metformin offers us the ability to touch multiple customers. So what happens is, these customers buy metformin from us, and that opens us conversations about what is the other range of products that they have in mind, and that helps us prepare for our next round of portfolio.
Okay, sir. And I just have one more question. Does the metformin HCl have regulatory approvals, and is it currently being exported?
Yes, it is currently being exported, and we have regulatory approvals. We have a CEP.
Okay, sir. I just have one last question, really sorry. I wanted to know about the PLI scheme. Any update on that? And what are you thinking about the CapEx going forward? Thank you.
Wonderful. So we are very positive on the PLI scheme, and we filed our application for the same.
Okay, sir. Thank you so much.
Yeah. Thank you very much. Participants, you may press star and 1 to ask a question. The next question is from the line of Deepak Rao, an individual investor. Please go ahead.
Yeah. Hi, actually. My question is, from the year, as you were saying, there's a bit of a volatility on the quarterly level. But yeah, between FY20 and FY22, what's the kind of top line growth and bottom line growth that we are anticipating?
I was not able to hear you very well. Can you please repeat your question?
Yeah. So my question is more about, maybe a guidance at a yearly level. While there is too much of a volatility at a quarterly level, we wanted to understand what are the kind of top line growth and a bottom line growth we are expecting for FY22.
For FY22. Yeah. So, I would say top line growth of about double digit 10% plus is what you should expect. In terms of bottom line growth, we expect it to be flat or somewhat lower than what we had last year.
Okay. And when you said should be lower than what we have last year, any high level quantification? It will be lower by 5%, 10%?
I'll be in a much better position depending on the price of ibuprofen in Q3 to be able to see. Two things are happening. One is not only ibuprofen, but even on the ethyl acetate side, if you look at the volatility that is happening, ethyl acetate being a specialty chemical product is governed, the cost of manufacturing is governed primarily by the cost of acetic acid and ethanol. There's a lot of volatility in both of these raw materials. So, these are products where the raw material pricing is changing on a weekly basis. I would have to require a crystal ball to be able to predict what these would be by the end of the year.
No, I can understand, sir.
All I would say is that as far as these kind of products are concerned, we are very competitive and we are confident of delivering performance in line with the market.
Sure. Another question was the non-IBU APIs that we are trying to gain traction for. How has been the performance so far? I know we must be having some internal targets with, let's say, 50% or 70% capacity utilization. How has been the performance so far? Is it as per our expectations? Have we been able to beat our expectations, or we have not been able to reach to an expectation that we had set out for?
It's a fabulous question, Deepak, and I think if you set your expectations high enough, you will never be happy. And on the other hand, if you lower your expectations to a point that they are already met, you will never be unhappy. So, but philosophy aside, on the new products, the non-ibuprofen part, our business has not delivered the kind of profit that we want, and it is understandable because that performance, financial performance, can only come once we have approvals into the regulated markets and the export markets. And it's really a COVID-related issue.
Okay. So fair to say, sir, I mean, when COVID and pandemic is over, we would be able to get those approvals. There is no technical issues with those approvals. It's just a kind of a pandemic-induced issue to this.
Absolutely. In fact, I would tell you the silver lining in all of this is that if I'm competing and I'm competitive in the Indian market, I will certainly be competitive in the export market.
Oh, great to know, sir. Yeah, this is it, sir. Thanks and all the very best.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Monisha from Antique Stock Broking. Please go ahead.
Yes, sir. Hi. Sorry about that. My line got disconnected earlier. So just had one question. On the exports contribution going forward, what is the percentage split that you see in the next 2 to 3 years? Will it be 50-50 for domestic exports or less than that?
So I think exports will certainly be more than 40% of the total business that I have.
Okay. Thank you so much.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Mohammed Ayaz from Aman Trading. Please go ahead.
Hello, sir. Thank you for the opportunity to ask the question. So my question is simple, one question. Whether we are able to sustain the growth what we have achieved in FY21 or it will be lower than 21 in FY22.
So, FY22, as I said earlier, we should expect a 10% growth in top line.
In terms of profit, sir.
So in terms of profit, as I said, it is going to be slightly lower than what I had in FY21, and that is completely directly related to a much lower asset utilization. Let me give you the background here. If I have a very high asset utilization for my ibuprofen, it also impacts my cost position. So once the demand picks up and the prices pick up, my profitability will come back, but it won't be enough to make up for the loss in the first 2 quarters.
Sir, one more question can I ask, sir?
Sure, absolutely.
Sir, in the history of splits and bonus, ibuprofen IOL is not having any history of bonus and split. So are you planning for that, sir?
Well, that is something that we are debating internally. We have yet to take a call on that.
Okay, sir. Thank you very much.
The board has to decide that.
Okay, sir. Thank you very much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Aejas Lakhani from Unifi Capital. Please go ahead.
Yeah, so thanks for the follow-up opportunity and much appreciate the clarity with which you have provided us the roadmap. So you're going to, and I'm just paraphrasing here to summarize my understanding. So you had cost leadership given your capabilities at manufacturing, and that only works out in molecules which have large volumes versus smaller volumes. So you're going to continue to focus on what you have done in the past with Ibu across other product lines. So that's made articulately very clear. Just actually 2 questions on that strategy. One is, sir, if you look at your pharma segment margins, EBIT margins over a period of the last 5 years, they have ranged at in the 17 and 18 between from a trough of around 14% to a high of about 43%, and we all know the pricing of Ibu that has been taking place in the market, and as a resultant of that, the margins keep fluctuating. So we're aware of that and the product mix, of course. But in your opinion, what is the steady state margins that you look at this segment, and also as you keep building the leadership in other other commoditized APIs over a period of the next 2-3 years as your product mix changes, where do you see this EBIT margin trajectory moving on a steady state basis? Thanks.
Awesome. That's a fabulous question again, Aejas. Let me begin by taking a step back and looking at the industry. If I look at the API industry at large, there is a broad Gaussian distribution of all the players. On an average, players make about 20% EBIT margins in the API industry. Yes, there are exceptions like Divi's that consistently makes more. Laurus had an exceptional year, but even Laurus average will make about between 20 and 25%. So what is our visibility going forward? Our visibility is that our profitability at an EBIT margin will be higher than the industry, and we will continue to be above 20%. So 22 to 25% is a healthy EBIT number that you should continue to see from IOL.
Awesome. That's very helpful. Thanks a lot.
Thank you. A reminder to all the participants, you may press star and 1 to ask the question. The next question is from the line of Subrata Sarkar from Mount Intra. Please go ahead.
Hello. Hello.
Go ahead, sir. You're audible. You can go ahead with your question.
Yeah. So my question is on the chemical side of the business. So can you throw some light on the ethyl acetate part of the business? We all know last quarter, this Q1 has been historical in terms of margin and pricing for ethyl acetate. So what is can you, in terms of quantitative data, can you share some data on what is the current price now vis-a-vis Q1? And what is the margin after the volatility of RM price?
Okay. I will break that question into two parts, Subrata. First is on the demand side. On the demand side, I would say the demand is pretty flat in the sense, we are maxed out on our capacity. So between Q1 and Q2, there will be no difference in volumes of what we sell. On the pricing, however, it really depends on the price of the raw materials. And I would say if you ask me for what is the price of ethyl acetate today, it is just above 100 rupees. If I look at what was the price in last month, it actually dropped to 90 rupees. What has been the historic highest price during the quarter, it touched 130 rupees. So, again, I will need a crystal ball to gauge the future and figure out, how stable this is going to be. It is going to really mimic whatever are the prices of acetic acid and ethanol.
So on the margin side, in terms of, you have given a great picture on the pricing point. So now RM cost, if you throw some light on the pricing of the RM cost, so that we can get some understanding of what is the average Q1 margin and vis-a-vis currently where we stand. This is one question. And sir, on a broader on a chemical side, if you throw some light on the IBP to MCA to acetyl chloride, what kind of margin we are experiencing in each of them, sir?
Okay. So I think there are multiple questions in what you have asked. I think first I would say that the raw material trend, ethanol, if you look at ethanol trend, that used to be typically in the 40 rupees a kg range, has gone up to 50s. And I think there was a brief period where for the first time domestic ethanol became cheaper than imported ethanol. When it comes to acetic acid prices, those numbers have ranged from 65, 60 rupees a kilo all the way up to almost 90, 95 rupees a kilo. So that's the range, and that should give you an idea what kind of margin is there. I don't want to get into the specifics of what my charging efficiencies are and therefore what my gross margin is on a product by product level. And I think when it comes to other products that you talked about, I would urge you to look at chemicals as a bucket rather than on a product by product basis. And when it comes to isobutyl benzene, when it comes to acetyl chloride, we are pretty much in line with the industry, and we are currently not selling any MCA.
Okay. Thank you, sir. So in that case, just a small ballpark number like this quarter as it stands right now, like there will be some compression on the margin in Q2 vis-a-vis Q1 on the ethyl acetate side, sir?
We don't see that right now. We still have, half the quarter left.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I will now hand the conference over to the management for closing comments.
So, thank you very much. I think in terms of our concluding remarks, first of all, thank you all for your time. The key highlights, I would say overall, despite the COVID-related and the other headwinds, our company has shown healthy performance, and it's in line with all the other leading pharma API players. We expect Q to be in line with similar performance, and Q3 and Q4 will show recovery both on top line and bottom line. The company has made fantastic progress on the credit rating. It has gone from KRA to KRA plus rating on the short term, and then on the non-fund-based working capital, we've gone from KRA1 to KRA1 plus. Our regulatory audit for the Russian regulatory authorities are planned in this quarter, and we look forward to your continued support, and we wish you all well. Thank you for your time, your consideration. Stay safe, stay healthy, and thank you all very much.
Thank you very much. On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.